Well, welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me right now is Payne Capital Management President and the host of Payne Points of Wealth podcast, Ryan Payne here. Also with us is Adam Johnson and Mike Lee. Great to see you. Thanks for joining the conversation.
Great to be here, Maria.
And Mike, I want to kick things off with you. With a market that is trading up again, the momentum is back this year after a huge year last year. Dow Industrials right now up 91, the NASDAQ up 119. One thing you like to see about markets trading up is when it's about fundamentals, right? And Netflix reported fourth quarter revenue and added over 13 million subscribers. The streaming platform reported a net income of more than $937 million. It is, however, preparing investors and users for more increases in prices. We're also looking ahead to the Tesla report. That comes after the bell. What's your take? Netflix up almost 10% this morning, Mike.
Yeah, Netflix just blew the doors off. I mean, we've come a long way from getting DVDs in the mail.
Yeah.
They continue to surprise. And you would have thought with all these other players coming in the streaming market, so I think 5 or 6 years ago with Amazon, Disney, NBC, and, Paramount, which is the CBS juggernaut, all these different players coming into the streaming market, that there'd be some cannibalization or Netflix would fall off a cliff here, and it just hasn't happened. And what's unbelievable is the amount of paid subscribers for the ad version. And something to keep in the back of your mind is that on Amazon, they are getting 4 times the revenue. They're charging 4 times as much for live TV ads on the NFL. So Netflix just added WWE. They're going to have Monday Night Raw on their platform, which is also going to bring heightened ad revenue. And if you think about it from an advertiser standpoint, you have so many eyeballs there that can't fast forward through the ads, can't DVR through it. So that's a huge revenue pickup that's going to continue to increase. This password sharing crackdown has worked spectacularly. Netflix is just on a run. And then as we look forward to Tesla tonight, the big question is over price cuts. Okay, are they cutting prices to win market share because their margins are so much higher and more advanced than everyone else in the EV industry? Or is it because you're seeing a collapse of this EV craze and the adoption rates slowing dramatically? And if it is the latter, can Tesla and Elon say enough about artificial intelligence, autonomous driving to overcome any financial shortfulls?
Just to be clear, you would buy these stocks at these levels, including Netflix?
So
even after the run it's had last year.
So Netflix, I think these big names continue to win. And you talk about a slowing economy. I like to say a lot of the Magnificent Seven are our new defensive stocks. When times are tight, what are people cutting back on? They're cutting back on going out. They're cutting back on trips. They're not canceling their Netflix subscription.
Okay.
Right. And so it's going to continue. If anything, they're going to spend more time on Netflix watching that. And Tesla, I've missed the move in Tesla. It trades at an astronomical valuation. I don't quite get it. The argument is that it should trade like a SaaS or a software as a service stock. I'm not there yet, but I'm not going to get in front of it. I think if Tesla sells offhandedly, like it did like roughly a year ago, I will then look at it. But right now,
you're not going to get in front of that train.
Tesla is General Motors at a 70 multiple.